I like to always kind of start when I think about financial literacy, which is the definition. Financial literacy to me is an understanding of how money works in the world. In a world where we're taking out more debt for things like higher education, and the burden of retirement spending now falls squarely on the family, it's really important that individuals have a good understanding of financial literacy. I think there are a lot of systemic issues which have brought more focus onto financial literacy recently. I think if we look at things like debt, that's a big part of this. We're now seeing more student loans being taken out than ever. And this is obviously, student loan debt is obviously a big part of the national conversation. So people now are starting their careers with large amounts of higher education debt. Whereas a generation ago, perhaps that wasn't the case. And there's reasons for that, obviously. It used to be that you didn't need a bachelor's degree or financial education to start a career that would provide for you and your family. And the cost of education wasn't as high. I mean, kind of going back to that basic definition, financial literacy is an understanding of how money works in your world. And so I tell people the first thing they should do is set up a budget. And this is a very simple exercise. Track how much you're spending and how much you earn in a given month. I tell people they can do a budget on a notepad or they can do it on a spreadsheet. But on one column on the left-hand side, write down how much you earn. Maybe that's $5,000 a month. But know what that amount is, and it's really, really important. And think about all the different sources of your earning. There is your job, your employment. Do you have any sort of pension? Do you have any sort of annuity payment? Anything else? Make sure you know exactly what that figure is. And equally as important is know how much it is that you spend every month. A lot of times, the financial literacy for most people begins with understanding their spending side of that equation. People are really good at understanding how much they earn, but they don't realize where that money goes. So you start to hear refrains like, I don't know where all the money goes every single month. So it's important to just know it and just write it down and just be honest with yourself about where your money is going each month. Look at your credit card statement. Look at your bank statement. And if you don't have those things, we'll actually come back to that about how you should be thinking about tracking your spending. There are some common areas then where people tend to overspend in a month. One of those are the reoccurring expenses like gym memberships or digital subscriptions like Netflix. There's entertainment. There's eating out, concerts, trips to the bar, or even now food delivery. And there's online shopping. And I think online shopping in particular has become a greater source of this overspending in a given month, particularly with buy now, pay later. When you think about companies like Affirm, they're making it incredibly easy for you to finance purchases with the click of a button. But I tell people to be wary because this is just another way of incurring debt in your monthly expenses. If you're unable to cover the entire cost of an online purchase in that month, it would be better to build budget habits to save for a purchase rather than to finance it through things like Affirm and other buy now, pay later platforms. I think there are two parts to this story when it comes to things like terms and conditions and the way people have access to their financial services. One part of that is the system itself. I believe that financial literacy begins with financial access. And for far too long, too many financial institutions erected artificial barriers to prevent underserved communities from accessing financial services. Things like difficult to understand terms and conditions. Things like basing access to credit to financial systems through a credit score. So part of this is that people for far too long simply didn't have access to things like credit cards, savings accounts, or mortgages or other sorts of banks and financing products. The other side of this is the individual. And it goes back to my example I said before about companies like Affirm and buy now, pay later. When you're in an online purchase environment, you're not thinking about the debt side of the equation. You're thinking about the gratification of making an online purchase. So you generally will agree to the terms and conditions presented to you very, very quickly. To which I say to people, take a step back, read the terms and conditions. If you don't understand a term in there, like interest rates, annual percentage yield, whatever that term may be, type it into Google and look it up. or use a resource like Investopedia, NerdWallet, Bankrate, any of those to make sure you fully understand the terms and conditions. I would not encourage anyone to enter into a debt arrangement if they don't fully understand the terms and conditions. I'm actually encouraged by the recent bill in Florida to require personal financial education in public schools. I think it's a step in the right direction to require more financial literacy education at the public school level. I like to tell people that financial literacy is a lot like literacy in reading. It takes time, practice, and discipline. So if we think about the ways that we learn to read, you start kindergarten. Sometimes you're starting even earlier than that, but kindergarten or first grade, and you learn the letters of the alphabet. You learn the sounds they make. You learn how those letters come together to form words. Financial literacy should be taught very much the same way. So begin to learn just the basic figures, right? What does it mean when we say income? What does it mean when we say expense? Define these terms so that individuals have the skills, knowledge, and tools they need to build budgets, so they can begin to see their income versus their expenses on a monthly basis and be making more informed financial decisions. But some of this too falls to the families. And as a family, for far too long, information about finances has been held taboo. I encourage families to discuss this with their children, particularly as children become older and older and older and start to want more purchases. Begin to understand that the conversation about what it means to purchase something. If a child is requesting a toy, if they're requesting a digital subscription or an app or whatever it may be, talk about what the cost of that is. Talk about how that fits into the overall family budget. And this is where it's almost like allowances for a new generation. Is it now that you provide a cash incentive to perform a chore, or is it about how we carve out space in the family budget to allocate funds for children to be making purchases?